At the start of our show today, I like to ask you to picture a single number that's supposed to tell you how excited Wall Street is about AI right now. That's basically what the Philadelphia Semiconductor Index is. It's a basket of the biggest US chipmakers, and it moves up when AI hype is hot, and it moves down when it's not. Last Friday, that index dropped 10% in one day. Now, that wasn't just a bad day. That's the kind of move that you would usually only see during an actual crash. And on Monday, Taiwan got hit first and hardest. The Taiex plunged more than 2,600 points. And TSMC, the company that quietly builds the chips inside almost every AI product on the planet, had its single biggest day price drop ever. Now, it sounds like the bubble just popped, right? Except by Friday, Taiwan's market had already clawed most of it back. So what actually happened? Which is exactly what we're looking at this week. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation. Now, before we get to the meat of the show this week, here's what's been happening in Taiwan.
TSMC has reported its best ever monthly revenue as it rides a surge in AI demand. The world's top chip maker reported May revenue of around $13.2 billion, up 30% from the year before. Total revenue in the first 5 months also climbed 30% year-on-year to around $62 billion. That puts the company in a good position to beat its 32% annual growth target for the second quarter.
Taiwan's stock market has seen its biggest ever intraday fall, but shortly recovered. The benchmark index, the Taiex, closed down 3.48%. Market bellwether TSMC opened almost 6% down, but its losses narrowed to 2.96%. Stock markets in South Korea and Japan also took major hits in early trading. This follows major downturns in the US last Friday, especially in the tech-heavy Nasdaq, which saw its biggest single-day drop in history.
Taiwan's stock market rebounded on Tuesday after taking one of the steepest drops in recent history. The benchmark index Taiex closed up 2.76%. That's after falling nearly 3.5% on Monday. Other Asian indexes also bounced back, with Korea's Kospi up about 3% earlier in the day. Most of the volatility has centered around AI and tech stocks, which took a big tumble in US markets last Friday, especially in the tech-heavy Nasdaq, which saw its biggest single-day drop in history. Taiwan's export boom is continuing to surge, with exports in May reaching their second highest level for any month. Finance Ministry data shows exports totaled more than $78 billion in May, up over 50% from a year earlier. Officials say global demand for AI, high-performance computing and cloud services continues to drive growth. Traditional industries are also benefiting, posting their strongest expansion in more than 4 years.
Export controls are the only tool to slow China's AI progress, but this is while major tech executives like NVIDIA CEO Jensen Huang have criticized these types of policies. How much role should the private sector have in shaping national security interests, especially when commercial interests don't always align?
If you just took the approach of anything that hurts an American company is therefore by definition bad for America, you would have no export controls. And that does not work. It's very clear that there are certain technologies that we don't want to go into adversaries' hands, and we just have to accept that certain costs are actually worth bearing for national security benefit, and therefore the economic interests of the company are not always going to align completely with national interests. I would also note that export controls have actually been really beneficial to NVIDIA in the past. The fact that SMIC doesn't make chips that compete with TSMC is largely because of US export controls on EUV. The fact that Huawei doesn't make chips that compete with NVIDIA is because the United States blocked Huawei from manufacturing at TSMC.
Last week, we talked about how Taiwan quietly became the single biggest country in the MSCI Emerging Markets Index, bigger than China, mostly thanks to TSMC. We called Taiwan the, quote, load-bearing island, unquote, of that index. This week, that load-bearing role got tested. First, on Monday, the Taiex dropped to around 42,000 points. That's a level it hadn't traded at in weeks. And TSMC alone lost roughly $110 billion in market value before lunch. But here's the twist. Just 2 days before that crash, TSMC reported its best month of sales ever. May revenue came in at $13 billion, a brand new record. And according to a fresh ranking from the consulting firm PwC, TSMC just climbed to 9th among the 100 most valuable companies on Earth. While Taiwan, as a stock market, is now the 4th most valuable in the world, behind only the US, China, and Japan. Then by Friday, the Taiex had already rebounded over 2% to close at 44,169. Record revenue, record ranking, record crash, all in the same week. Either something doesn't add up or it adds up perfectly. So let's start with what actually triggered Friday's epic drop on Wall Street, because it traces back to one company, Broadcom. Not Nvidia this time, Broadcom, which makes custom AI chips for companies like Google. Broadcom reported its earnings last week, and here's the headline. Its AI chip revenue is on track to grow 200% this year. Triple. And Wall Street's reaction was somehow not enough. Yes, a company forecasting its AI business will literally triple in a year, and investors punished the stock because it didn't also raise its full-year guidance on top of that. Now, that's not how markets normally react to good news. That's what happens when expectations have completely detached from what's actually achievable. It's not that Broadcom had a bad quarter. It's that the market had already priced in a perfect quarter, and tripling your revenue still wasn't perfectly enough. So Broadcom dropped first, then dragged the entire Philadelphia Semiconductor Index down 10% in a single day. And because Asia trades after the US closes, Taiwan and South Korea opened Monday and already absorbing that shock immediately as the stock market opened. South Korea's main index fell more than 8% in early trading. And here's some context. Korea's stock market is up roughly 100% this year. 100%, doubling itself. So an 8% drop there is basically a rounding error on a rocket ship. Taiwan's situation was different. The Taiex fell a level it had been comfortably sitting above for weeks. And TSMC, the single most important stock on the entire exchange, opened down sharply and kept falling, eventually posting its largest ever single-day price drop. Other major names followed it down, like Hon Hai, aka Foxconn, which assembles iPhones and builds AI servers, the chip testing company ASE, electronics component maker Yageo, and power equipment maker Delta all dropped around 7% too. So that's the surface story. One company's, quote, not good enough earnings somehow knocked roughly $110 billion off the value of the world's most important chip maker in a single morning. But here's what's going on underneath. The companies spending the most on AI, the big tech giants, everyone assumes are sitting on mountains of cash, are starting to run out of mountains of cash. Over the past few months, companies like Alphabet, that's Google's parent company, Meta, Microsoft, Amazon, and the chipmaker AMD have all been issuing bonds, basically saying, lend me money now and I'll pay you back later with interest. Normal enough on its own, but these companies aren't just borrowing in US dollars anymore. They're issuing bonds in euros and even in Swiss francs. When a company starts borrowing in every currency it can find, that usually means the pool of dollars willing to lend to it has gotten a little tight. And then here's the part that really got people's attention. Alphabet, for the first time in roughly a decade, issued brand new shares. Normally, when a company has extra cash, it does the opposite. It buys back its own shares, which makes each remaining share worth a little more. Issuing new shares does the reverse. it spreads the same pie across more slices, so every existing slice gets a little smaller. Companies only accept that trade-off when they need cash badly enough. Why does any of this matter to Taiwan? Because every one of those companies, Alphabet, Meta, Microsoft, Amazon, is also one of TSMC's biggest customers. If the companies funding the AI boom are starting to scrape the bottom of the barrel, that's worth knowing before anyone assumes the orders keep flowing in at the same pace forever. Now, here's where it gets even more interesting. Because the exact same time all this was happening, 3 of the biggest private companies on Earth decided this was the moment to go public. An IPO, that's an initial public offering, is when a private company sells shares to the public for the first time. So, ordinary investors, pension funds, and index funds can finally buy in. This week, SpaceX, Elon Musk's rocket and satellite company, is going public at a valuation of roughly $1.75 trillion US. Right behind it, OpenAI is finally going public around $850 billion. And Anthropic, the company behind the Claude AI model, around $975 billion. Add those up, and you get close to $200 billion being raised within a few months of each other. For comparison, the biggest year ever for IPOs before this was 2021. The entire year totaled around $120 billion. These 3 companies alone are about to raise more than that whole record-breaking year combined. And here's the part that explains why this matters for everyone else in stock prices. NASDAQ, the S&P 500, and another major index called the FTSE Russell have all recently rewritten their rules to fast-track giant new companies into their indexes almost immediately, sometimes within just a couple of weeks of going public instead of the usual waiting period. And why does this matter? Because a huge amount of money in the stock market is run by what's called passive funds. That's funds that don't pick stocks themselves, they just automatically buy whatever's in a given index, in the exact proportions of the index. So the moment SpaceX, OpenAI, or Anthropic gets added to an index, billions of dollars of passive money is contractually obligated to buy them, whether the price makes sense or not. Which means money that might otherwise sit quietly in a, say, TSMC company gets pulled out to make room for the new arrivals. And it's not that anyone's turned bearish on TSMC, it's that the pie just got new slices and something has to make space. Now, here's the part that should genuinely surprise you. May was a great month for foreign money flowing into Taiwan. About $20.8 billion US came in. That's a massive number. And yet, at the same time, Taiwan's own banking system was quietly running short on cash. There's a number called the interbank overnight rate. Basically, the interest rate banks charge each other when one bank needs to borrow cash from another, just for a single night to balance its books. In May, that rate hit its highest level since the 2008 global financial crisis, 16 and a half years ago. And then here's the central bank's own tool for managing something exactly like this. Taiwan's central bank regularly sells something called certificates of deposit, short-term IOUs that banks can buy with their spare cash, earning a little bit of interest while parking the money safely. And for years, these auctions were always oversubscribed. Too many banks with too much spare cash chasing too few certificates. This time, the auction didn't even sell out, and the interest rate the central bank had to offer to attract buyers hit an 18-year high. Now, similar things happened to the U.S. bonds not long ago. So, record foreign money coming in and record tight cash in domestic banking system at the same time. Where did it all go? Well, the answer is leverage. A huge number of retail investors in Taiwan have been borrowing against their own stock portfolios, called margin loans, and stacking that on top of mortgages and car loans that they already had. There's actually a phrase for it now. 3 loans, 4 loans, all under one roof. And here's the consequence. When your stocks are also your collateral and the prices suddenly drop, your broker doesn't wait for you to panic. They automatically sell your shares to cover the loan. That's what we call a margin call, and you do so at a loss. So when Monday's crash hit, some of that selling wasn't investors losing confidence. It was forced selling. Margin calls firing off one after another, which is part of why TSMC's drop was so much sharper than the actual news justified. And Taiwan's not alone here. South Korea's financial press reported its own margin lending just hit a record high, somewhere around 26 billion US dollars. Same story, different country. And if you zoom out, the pattern is everywhere. So far this year, only about 40% of the companies in the S&P 500 are even up. And of the roughly 30 companies in the world worth over $1 trillion each, only 3 are non-American. Saudi Arabia's state oil company, TSMC, Taiwan's chipmaker, and the South Korean chip duo of Samsung and SK Hynix. Which brings us to the strange position Taiwan is in right now, being the load-bearing island we talked about last week, and being the most exposed to a global tremor in the stock markets. Those aren't two different things. They're two sides of the same coin, if you will. Foreign capital needs Taiwan's AI exposure to chase the world's hottest returns. Taiwan's market needs that foreign capital to keep flowing in to fund the next factory, the next expansion. That's about as symbiotic a relationship as you'll find anywhere in global finance. And when the tap runs dry, even briefly, both sides feel it instantly. Remember, Taiwan's stock market is now the 4th most valuable in the world. That's not a small player getting knocked around. That's one of the 4 biggest stages on Earth, and it just showed everyone how thin the floor underneath it can get. So, is this it? Is the top of the AI boom finally cracking? Well, almost everyone agrees. Probably not yet. But the way people are framing it is telling. Picture the AI rally like a day at Disneyland. Everyone rushes in at opening, the energy builds all day, and then late in the evening, the fireworks start. Once you see the fireworks, you know the day's winding down, even if the gates don't close for a couple more hours. Some people are looking at this trio of $200 billion IPOs and asking out loud, is this the fireworks? Is this the signal we're entering the final stretch? Why are they all suddenly in need of so much money? Honestly, probably not. More like mid-afternoon than fireworks. But the fact that people are even asking the question tells you something about whether we are in that part of the cycle. There are problems underneath the surface here for Taiwan's economy, and clearly this week showed those problems could just as easily ripple out and become problems shared around the world. So here's the hypothesis worth sitting with. Last week, we said Taiwan had become the load-bearing island of the global AI trade, the piece everything else quietly depends on. This week didn't change that. If anything, it confirmed it. But it revealed the flip side too. Being load-bearing doesn't just mean everyone depends on you when things go up. It means everyone else's weight presses down on you hardest when things wobble. Taiwan posted a record month of chip sales and had its worst single-day trading in the same week. That's not a contradiction. That's what load-bearing actually feels like in real time. So, where does that leave us? 2 ways to read this week. 1, this was just a healthy, overdue cool down. Leverage get flushed out, prices reset a little, and the AI story keeps marching on, with Taiwan right at the center of it. 2, this was a preview, a tremor before a bigger one. A reminder that the same wiring connecting Taiwan to the world's AI boom also connects it to the world's AI bust, whenever that finally comes. Picture that load-bearing wall again. The one thing holding up the whole picture. This week, it didn't crack. For one day, you could hear it creak. And if it ever cracks for real, well, this show will be here to tell you about it. Thank you for listening to the show. I'm Joey Cho. Tune in next week to find out about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.